And now it's time for Talking Trade with Sandi Siegel and Ken Wasylik, sponsored by the Wisconsin Center for Manufacturing and Productivity, Micheal Best Strategies, and Carroll University.
Welcome to another session of Talking Trade. I am Ken Wasylik, Managing Director of EM Wasylik and Associates, an international business development company.
And I'm Sandi Siegel, President of ME Day. Welcoming back today, Sarah Helton, Partner and Practice Group Chair, Government Procurement and Trade at Micheal Best Strategies. And it's such a pleasure to have you back. Welcome, Sarah.
Yeah,
Thanks,
welcome.
Sandi. Thanks, Ken. Great to see you guys again.
So, love it having you on the show and talking about, current everybody's favorite topic, tariffs and trade. And, I think it was just in February, we had you on the show at the beginning of the new administration and talking about all the excitement and noise, if you will, that was out there on, what's coming, is it coming, and a lot of speculation. And didn't even have all the, executives in place yet and so forth. And here we are 2 months later, and quite a bit has happened. So I know, we're both in the thick of it, and some of the biggest challenges is separating the noise from the reality, what's speculated, what's a tweet versus what's, really happening and what's gone through. And so, talk a little bit about that today. Where are we and what lies ahead, and, what's the buzz in Washington and so forth. So before we get into the very animated conversation about China, let's talk about all our other trade partners. And that was a lot of back and forth, already a lot of back and forth. President Trump put through the reciprocal tariffs, the second imposition of the emergency tariffs under IEEPA, and the famous chart that, President Trump held up on calculating how to balance trade imbalance and so forth, and had come out strong with some very high tariffs for imports from, a good many dozens of our trade partners outside of China, and many in Europe and so forth. And then just some days later, we put a pause on that and reduced it down to 10% for all those countries. So a lot, all at once. So let's talk about that 90-day pause and that whole big chunk of tariffs and on all the rates. What are your thoughts on that? What's everybody saying about that group of countries and the negotiations and so forth?
Sandi, I absolutely understanding that just within the week from when the reciprocals were announced, that there was also a pause for those that didn't retaliate, which was essentially everyone but China. And also too, after you saw Europe withdraw its retaliation, specifically on the 232, not on the reciprocals. And so everyone's benefiting right now from what is the 10% baseline and the 90-day pause. So what does that mean? Well, throughout this announcement, my perspective is, Canada and Mexico certainly won in this, right? In the consideration that not that everything was withdrawn for them, but it remains status quo, right? And when we look at Canada and Mexico, almost in a distinct bucket from where the rest of the world is, just as China's a distinct bucket from the rest of the world, my perspective is, we are going down a pathway of hopefully that can only provide further relief, right? That USMCA compliant exemption remains in place, what seems to be in perpetuity now, even if those IEEPA tariffs were to go away, some preferential. So that remains a core part, I think, of the negotiations that we'll continue to see. And also, if the IEEPA tariffs go away, anything that's not USMCA compliant is still even in a better bucket than the reciprocals. That would be at 12%. So it was a good day for them, but also too understanding the only drawback for them is the IEEPA tariffs are still in place, right? When we look at the rest of the world and that they're at a 10%, what a sigh of relief for a lot of companies that are impacted in a negative way by these tariffs, because it does provide them just a little bit more time, not enough time that they need, but just a little bit more time to understand, okay, what do we need to be evaluating as far as our supply chains and imports over these next 90 days for countries that from Vietnam, that's close to almost 50%, right? And understanding too the uncertainty of what's going to be happening over the next 90 days and beyond. So the administration certainly has signaled, right, that negotiations are moving forward, that countries are coming to the table. If you're looking at if the movement down to a 10%, has it worked in bringing countries to the table? It has, right? We are seeing that foreign leaders are meeting with the president and other leaders in the administration. We also understand too that this movement down to the reciprocals, I don't think that you can separate it out from the actions in the market that we saw over that week time period that really supported Secretary Benson looking at President Trump and with strong encouragement of, we got to be able to negotiate. And, because we saw the stock markets, we saw the bond yields, we saw the US dollar index, we saw IPOs on hold. All of that was a demonstration that even if President Trump wants to continue to move forward with tariffs as a tool to accomplish his goals, you also have got to be able to be, in his words that he used several times over the past couple of weeks, flexible, right? And I think that demonstration moving down to the 10% was that as well. One though to note is understanding for where there was exemptions for reciprocals is, in the sectoral bucket. And that's an area where we haven't seen slowdown, right? In fact, we have seen new investigations being announced just over recently related to pharmaceuticals and semiconductors, just as President Trump has been talking about since the beginning of his administration, that those would be targets. So some alleviation for certain countries, but still a heightened action that we'll continue to see in more of the sectoral bucket from my perspective.
Well, that's good news on several fronts. It's interesting that you talk about Canada and Mexico being winners. I don't know if from a business perspective, any of us are thinking there's going to be a winner here. Hopefully there is. But let's move to the big gorilla here, which is China.
Mm-hmm.
So China, it still has the tariffs. We have what appears to be an all-out trade war between President Xi and Premier Xi and President Trump, back and forth, back and forth. Where's this all going? What do you see? What's the end game here?
Ken, it is at a peak, certainly, especially too when you have the leadership for China speak that, their market isn't responding to American products anymore. And so even if there's further retaliation, they're not going to respond to it, right? It's as though both China and Mexico have done as much. And China has been one, right, that they aren't backing down, right? We've seen several rounds of retaliation, starting off first with understanding tariffs on certain industries that are important to the U.S., energy and agriculture, right? We've seen actions taken against U.S. companies on, prohibiting investments and export controls, especially export controls too for critical industries for us like defense.
Mhm.
So with all of this ramping up, right, and the retaliatory tariffs on our side ramped up further, you're looking at the overall landscape, and by our calculations, depending on what you add in it, if you're adding the 301s with IEEPA and the reciprocals, you're facing a near 170% in retaliatory tariffs. So, I mean, that is incredibly impactful, understanding, where China is still as a leading trading partner for the United States. And where it goes from here is where you're starting to see, at least from my perspective, still no incredible movement by either leadership, but there is starting to see some language around wanting to make a deal with China, particularly from the US, and understanding what does that mean for China to come to the table? What does that mean for the US to come to the table? And so from my perspective, I do think that you're going to start to see that at some point. The timeline of it is unclear right now, but even from, industry leaders, to be able to say, listen, we're interested in being able to have some negotiations between these two countries is starting to be additional touch points into the administration to try to get a deal done sooner than later, right? Let's not draw this out for too long. And the market is reacting to that as well.
Yeah.
Just on China alone. The other consideration that's interesting though over this time period is, and you guys have seen it, right, is just as we're also ramping up our negotiations with other trading partners outside of China, so is China.
Right.
And China, in leadership being able to meet with various EU partners and understanding reshoring their trading partnership, it has been very noteworthy. Also, too, understanding, right, where China has met with Vietnam and signed, cooperative agreements with Vietnam, making their swing throughout the Indo-Pacific. That is noteworthy to understand. China is going to remain in the center, both directly and indirectly, throughout these trade negotiations.
So it sounds like there's some movement on both sides, and there's an anticipation that there's going to be some kind of agreement going forward. So good. Let's go to the other side of the ocean, or the other side of the world, our European friends and trading partners. How do you see that developing over the next 12 months or so?
Well, we can start off with what's happened today, and understanding where the President Trump has met with the Italian Prime Minister, I think even between 20 minutes before we have gathered today, that, he has shared with the press that we will get a deal done with the EU. Now, the devil's always in the details, what that looks like, what each, trading partner is going to be putting on the table is uncertain, but it is important to be able to understand, the constructive discussions that it seems as though have been had between President Trump and the Italian Prime Minister. We also understand, too, that the EU trade chief has met with USTR Ambassador Greer, as well as, too, with Secretary Letnick earlier this week as well. And understanding what they've put on the table is essentially a 0 for 0, in reciprocal tariffs. But EU has a lot to be able to try to negotiate through, because not only is the reciprocal tariffs at 20% that they want to negotiate, they also have strong interests between a lot of the sectoral tariffs. And what's going to be on the table for that? How can those be negotiated where they previously had, quotas for the steel and aluminum?
Mm-hmm.
Now it's not only that, but it's also the autos. And then you look at the pharmaceutical tariffs that are likely going to be coming. So those discussions, from my perspective, those aren't going to happen overnight, right? Those are going to be long negotiations, but it seems as though there's interest to be able to get something done. And this is all after, largely, right, that the EU, after threatening to retaliate on the steel and aluminum in particular, put that on pause. And so that was certainly a big demonstration when they were releasing the list and had approved of the retaliation, for things that were going to be impactful for the U.S. market, particularly for consumer goods when you're looking at motorcycles or whiskey, gene products, really central to a lot of some of the critical exports into the EU. And understanding that for the U.S., if I have it correctly, the U.S. was the largest partner for the EU on EU exports, about 20, and I believe it's the second largest partner for the EU imports. So certainly not to be able to underscore the importance of those negotiations going forward for the benefit of both the U.S. and the EU.
So, as we were chatting earlier, what's happened, what's on the table, what's, in the works, and what's actually happened, and a lot of reactions in the market, and, pushbacks, negotiating with other countries. Some of the new sectorial things like pharmaceuticals, autos, or whatever, are going through the more, traditional and regulatory process and going through investigation and, giving time for the trade and for those, industry sectors to respond and open comment periods and so forth. So at least there's a sense of the process and so forth. The reciprocal rounds of duties versus round one that was, focused on China, Canada, Mexico, and that was emergency under the pretense of fentanyl and fentanyl coming into the country and so forth. And the round two of reciprocals, which again, all our European trade partners, Vietnam, some of these, really extraordinary tariffs, was under that same umbrella or executive order, which many have said is more or less a stretch of emergency reaction and so forth. And I believe there's already been some pushback on that. And I think I heard yesterday the governor of California has filed a formal complaint, and there's some momentum there. And even with the fact that we brought it back down to 10% for all those trade partners, but some things are moving so fast and so rapid that one could argue there's no opportunity to respond, react, comment, let alone change your supply chains. But how much momentum, or is there, what is happening in Washington in regards to challenging, some of how this is being implemented? Yeah. Whether it's been effective or not, I'll just say that. And clearly it's getting the reaction that, was hoped as part of this process. But in the meantime, what's going on behind the scenes on that?
Yeah. Well, first off, I know when we had last talked, right, we had discussed the likelihood of litigation around this, right? And the sense that, yes, you will see litigation. It's all about time, right, for it, and who's going to be the one to challenge it. Right. Well, now fast forward to where we are after reciprocals were announced, mid-April, and just recently, having some better understanding about what the full landscape looks like, at least of what we know now. We do see several other lawsuits on the books. And so California, yes, was most recent, but we also understand that there were other conservative groups that have filed suit. And so that's going to be something that everyone is watching, right? The two of the groups that we know are Liberty Justice Center and also to the New Civil Liberties Alliance, all challenging under Sandi, just as California is under IEPA. And one of the things of arguing is exactly what you had shared, is the processes for which these were conducted, right? That it wasn't filing the Administrative Procedures Act because it was filed, or they were proceeded under IEPA. With that consideration, it's, the administration, Department of Justice has asked for those to be consolidated. So they're not under different venues, and where it could be easier potentially to ramp up to the Supreme Court fastest. Even if they are consolidated, the Supreme Court could still take them up. We'll see what that looks like. But it will be something to watch closely, because this is unprecedented action of using tariffs under IEPA, and it is something too that has impacted numerous entities across the board, small, medium, or large, across all industries. So that is just at the beginning standpoint. When you're looking outside of litigation, and often the world that I live in of, engagement with the Hill and in the administration, where we were with the administration, I would say more generally speaking of, 12 weeks ago at the beginning of his administration, and rapid fire of the announcement of tariffs, also understanding of how fast, how frequent these actions were announced. One of the biggest things that, the administration has shared, we're not going to see any exemptions, we're not going to see any exclusions, right? And we hadn't so far, but now we are starting to see over the past couple of weeks that language starting to change just slightly. And from the president himself talking about how, understanding there may be differences in how companies can be able to respond to these. How countries can respond to these. And so again, going back to being able to have flexibility. So still a lot of ambiguity about what that looks like, about what the path forward, but what that would hopefully support is, President Trump's agenda in a couple ways. One is, understanding, being able to bring trading partners to the table, securing more fair trade terms. Also understanding giving time, for companies to be able to reinvest, reevaluate the supply chains. If they have the relief, being able to have the resources to do that and the time to do it. So we are seeing, some different positioning on that as far as the language that's being used by the administration compared to where we were 12 weeks ago. And it's
And
something too.
yeah.
Sorry, Sandy, go ahead.
Well, I was just gonna say, so if I'm hearing you in a positive way, it's, I think even people within Washington have been hesitant to challenge, on the onset. And I think, more and more people, particularly with the market falling and some of the other fallouts and seeing some of the casualties in business and so forth are getting the attention and as you say, promoting the flexibility, which certainly is encouraging that there's hope that, it's not so much a heavy hand and that we're willing to negotiate on some of these things.
Yeah. I would just highlight too, on the congressional side, a couple of things that we've seen recently too. Members are paying attention, right? I mean, this is hitting their districts, it's hitting their states, some in a beneficial way, and certainly for others in a detrimental way. And so members are paying attention. They are wanting to know what's happening, how it impacts, their constituents. And so just to underscore that of the importance to be able to share, organization stories with that. We have seen, right, some legislation introduced on it, but we're not going to see that passed, into law. And so what that looked like, though, it is a demonstration for where, Democrats are. We have seen some Republicans, for instance, several weeks ago, the Senate had approved a joint resolution related to the IEEPA tariffs for Canada specifically. And that was a Democrat-led joint resolution, but we did have some Republican senators join on, like Senators Collins and McConnell and Rand Paul, join on to that. And while it wasn't going anywhere, we are seeing some members being more vocal on their concerns around it, both Republican and Democrat.
Yeah.
So,
which is good ultimately, right? And again,
well, the
all that
markets have spoken as well. I mean, a rapid market rising yields on the treasuries. I mean, these are major changes that I would say normal people that have their 401ks as well as Wall Street are voting one way or another, depending on the administration's moves as well.
yeah. So there's a lot at stake here, but also too understanding that as fast as things have happening, there's not going to be, I think, quick resolution here, but we are in the pathway to certainly options to provide that.
Terrific. Sarah, it's always such a pleasure getting your perspective and, and you're there on the ground and seeing it. Any parting words of things to keep our eyes on, that are, everybody's focused on right now, or just pay attention to the negotiations?
Sandy and Ken, just you guys are right. It's important to be fully informed of what's happening because things are changing so quickly. Not to rush to failure by any means, but understanding that to be engaged, to be able to talk through the impacts for better, for worse, of where these tariffs are going, and to share that with members and with the administration, and understanding that there's certainly a pathway forward, but it's a long road ahead. And so we can find resolution here, or we can also be returning to with a continued route on for tariffs. So.
Okay, well, great.
Well, I look forward to having you back as it remains fluid and somewhat volatile, I think, for the upcoming period. So thank you all for taking the time to join us today.
Yeah, thanks, Sarah.
Thank you.
You've been listening to Talking Trade with Sandi Siegel and Ken Wasylik. Sponsored by the Wisconsin Center for Manufacturing and Productivity, Micheal Best Strategies, and Carroll University.